Good morning, everyone. It's a pleasure to welcome you this morning. A warm welcome on a beautiful sunny day here in Melbourne, Australia. The stated purpose of Melbourne Business School is unleashing leaders and ideas for a sustainable future. And that's one thing that we're doing today. And specifically, this event is brought to you by the Center for Sustainability and Business here at Melbourne Business School. And this is a real opportunity for us to dig into the current issue of climate change, the importance that it has for business strategy and ASX companies today. I would like to just start with acknowledgement of country, and in the spirit of reconciliation, Melbourne Business School acknowledges that we are on the lands of the Wurundjeri people who have been custodians of this land for thousands of years. We also acknowledge the traditional custodians of country throughout Australia and their connections to land, sea, and community, and we pay our respect to their elders, past, present, and emerging. So this morning we have three distinguished guests that we are very pleased to have with us to discuss this issue. We'll start with Professor Glenn Hoedker. He is the Center Director here at Melbourne Business School for the Center of Sustainability and Business. He is joined by Tanya Archibald, who is the CFO of Blue Scope Steel Limited, and she will be discussing the journey that they are on and that they have taken over the last, in particular over the last 18 months, of some exciting developments there in their organization. Jody Barnes joins us. She is the Senior Analyst of ESG at the Australian Council of Superannuation Investors, and I will be moderating the discussion today. I'm Brandon Lee, also an Associate Professor of Strategy here at Melbourne Business School. So many of you may have joined for a previous breakfast series online last June, actually, on climate change and unpacking net zero and what those implications are for this. And this webinar today builds on that, and we're bringing some insights from a leading ASX company, ACSI's engagement and analysis across many of the ASX200 companies, and then of course our own faculty. So I want to get started, and basically what we're going to discuss today is where are we currently as it relates to climate change and business strategy. What has been the strategic response, and then finally what's the future focus, and what does that look like for us as we go forward. So I would actually like to start with Jody, if I can. And ACSI has recently released your latest report, Promises, Pathways, and Performance Climate Disclosure in the ASX200. Could you give us a sense, Jody, of what the key messages of that report are? And from your direct engagement with companies, can you give us a sense of where companies are in terms of climate disclosure?
Yeah, thank you. I'm really pleased to participate in this today because 2021 has really solidified climate change as both a business issue and a strategic issue. And grappling with how companies refocus strategy with climate change as a key underpinning is extremely relevant. So yeah, that's right. The role I have at AXI is leading our engagement program on behalf of long-term investors with carbon intensive and fossil fuel based companies. And whilst there's a range of questions that we ask boards, the nexus really comes down to how is the business resilient? How is climate change being factored into decision making, and how companies are integrating climate change into strategy, and what does that look like over the short, medium and long term? And these questions that we're asking boards really underpins that research that we've done, which looks at the market trends of both climate change disclosure and management. And from that and our engagement, I think the key takeaways are, the first is that there's a strong expectation that high risk companies need to be moving from that risk management and preparation side, which would be, the identification of risks and opportunities, knowing where your exposure is, undertaking scenario analysis, to really the other side of that coin being demonstrating action on climate change, demonstrating how scenario analysis informs corporate strategy, and demonstrating how the business is aligning to the goals of the Paris Agreement or is resilient to a low carbon transition. The main finding that research showed was actually that there was a huge uplift in net zero commitments by ASX listed companies. It jumped from something like 14 to close to 50. You know, I would say we're coming into reporting season now, and we're increasingly seeing more companies adopt net zero. But whilst it was only about 1 quarter at the time of our research that had set a net zero commitment, I think the weight of those companies is what's significant. So of that kind of 1 quarter of companies, that covered almost 1 trillion, or it was over $1 trillion, which is about 50% of the collective market capitalization of the ASX200. And what that number tells us, because $1 trillion and 50% of the ASX200 collective market cap, I think that money talks volumes. And what it's telling us is, on aggregate, Australia's biggest companies are the ones that are moving and setting net zero targets. It also tells us that the global and market signals that the global economy is accelerating towards a low carbon one is being noticed and being factored in by Australian market participants, whether that's seekers of capital, owners and managers of capital, or financial intermediaries. They're all responding to the same signposts regarding the transition, but it's also reflecting the global awareness to avoid the worst impacts of climate change. Net zero really needs to be met by mid-century or sooner, which was highlighted in the recent IPCC report. From those net zero commitments, we're also seeing companies back these up with decarbonisation and transition plans. So we are increasingly seeing companies setting targets on how their business is going to ratchet towards net zero, which is a really crucial part of the process, because to incentivize business and leaders to make steps, you know, you really have to break a long-term target down into shorter-term steps. And that planning, whereby companies are going through the process of saying, here's our short, medium and long-term targets and milestones to get to net zero, is really pivotal, because this leads me on to my last observation, which is, you know, once companies establish those boundaries, what we're seeing increasing is that they are beginning to embed climate change decision-making and climate change into decision-making and strategic planning. Because once you have those milestones that you've communicated to investors on where you intend to be, you have to show action against it. And what's been done is, I think that really solidifies, as I said earlier, you know, climate change and sustainability as a mainstream business and investor issue. And I think that's the really exciting part that we're seeing out of our engagement and what we were seeing in that research, because we're starting to see those green shoots of how climate transition is not just about resilience and not just a hygiene factor, but it's a force of competition, it's a competitive advantage. And what companies are putting forward to investors are roadmaps where sustainability and climate change no longer set off to the side of corporate strategy, but are an integral consideration within the business strategy and the business strategy process.
Jody, that's a fascinating overview, and I think it's really important to sort of contextualize that. And I think for me, what's going to be most exciting is to see how firms now move on this, and who becomes first movers, second movers, and what sorts of implications that has. Not only, obviously, this is absolutely critical for climate, but then there's also some really interesting business opportunities amongst the risks that transition to those is really quite interesting. And so thank you very much for that. If I can turn to Tanya now, to that point, BSL has really made a lot of progress in the last 18 months, culminating in the recent announcement of a net zero target and the decarbonisation strategy. So if we can step back from that announcement for a moment, what is BSL's approach to climate change, and what role have you played as CFO and continue to play in that, as well as your appointed Chief Executive of Climate Change, Greta Stevens? Could you just comment on that a bit, Tanya?
Yeah, thanks, Brandon. And I think they were really good comments from Jody as well. What I'd like to do in the first instance is provide a bit of context around the nature of the challenge that BlueScope faces, because I think it helps explain how we're approaching this particular issue. So 92% of our emissions, which is around 10.5 million tonnes, Scope 1, Scope 2, they come from our iron and steel making processes at our 3 main sites, Port Kembla, Glenbrook and North Star in the US, all different technologies. And a good part of the Scope 1 emissions, they're from the Port Kembla location, which is a blast furnace operation. And it goes to the heart of the issue in the steel industry, which is the blast furnace operations. And it's where the chemical reaction which occurs to extract the iron from the iron ore, it requires carbon to make it work. And at the moment, there is simply no commercially viable alternative technology operating at scale to replace it. Lots of exciting projects which are all evolving at this point. Lots of interesting talk about green hydrogen and how it might be applied in different ways. But there is quite a way to go in the evolution of those technologies and the supporting enablers. And it's probably more likely to be the 2030s, 2040s. And if you look then at the other potential alternatives out there, which is the scrap-based EAF technology, there is simply not enough scrap in the world to convert and satisfy demand for steel. So what steel fundamentally has is a technology challenge. And it's all about how the various technologies might evolve and also what new technologies might emerge, because there's a very modern fleet of invested equipment. There's trillions of dollars invested in this, and there's a lot of incentive to fix this problem. And so the question here is, how do you get the timing right such that you allow enough time for the technologies to evolve and for newer technologies to emerge, whilst not being viewed as a laggard by your customers and shareholders? And of course, what you're dealing with is very expensive assets, very high cost, long-lived assets. So you can't afford to get these decisions wrong. So in terms of the approach that we've taken, first step, very, very clear recognition that this is the number one challenge for the organisation. And it sits at the heart of the corporate strategy. It's not an adjacency, it's not the fluffy stuff that sits off to the side. It really does sit at the heart of the group strategy. And that goes hand in hand, I think, with a key principle that we have around open, transparent and credible communications and engagements with our stakeholders, whether that be our employees, our investors, our customers and our local communities. And the senior leaders, they have to be front and centre in those engagements. So if I just zero in on the investor space for a moment. So for a number of years now, we've been releasing our sustainability reports and we've continued to build upon the quality of our disclosures there. And this year we supplemented that with our climate action report. It's a very extensive document that sets out our targets, our goals, our decarbonisation pathways. And then we back that up with engagement forums. So earlier this week, we conducted a 2-day investor webcast with a deep dive on how we're approaching climate change. And over the next month, we'll back that up with an ESG roadshow, which is the one-on-one engagements with the investors and the proxy advisors in the bank group. And we'll be seeing Jody, of course. And that's now become a very large roadshow. It's actually bigger than our financial results roadshow. And that's led by myself or the CEO. And that goes to the visibility and the buy-in of the senior leaders in the organisation. And of course, the purpose of those engagements is you've got to make sure that you're getting your story out there, because it is very easy to look at a headline in a newspaper and think, oh, green steel's already here. And it's actually not. There's a long way to go in this. So you've got to make sure that you get the story out there. But it also gives opportunity for people to challenge and question and give us feedback. So that's important. I then, just in terms of internally within the organisation, we've clearly set a very comprehensive strategy. We've got quite a number of key focus areas. We've set targets to support the execution of the strategy. Those targets operate at the organisational level and at the business unit level, and they're linked to executive remuneration. And we've resourced up. So for a number of years now, we've had people within the business units who've had climate as part of their role, and that's been important. But more recently, of course, we've set up Greta and her team. So Greta is the Chief Executive of Climate Change. Greta and her team, they help coordinate our efforts across the BlueScope group, and they support the execution of the strategy from a group perspective. That's a small team of very deep experts. They cover technology, policy and the energy markets. And very specifically what they do is they're looking out over the horizon at those emerging and breakthrough technologies. And that's really important, because if you left it up to the people in the business units, the operating units, they're very focused, rightfully so, on the here and now. And it's hard to think what's going to happen in 5 years, what's going to happen in 10 years, what's going to happen in 15 years. So having that corporate team with the capacity to think those things through is very, very important. We then also did a rethink of our capital allocation framework, and that's where we specifically incorporated climate investment. And that goes to the heart of my role as a CFO, because of course we're a very capital intensive organisation. So a big part of what I do is capital allocation. And so within that framework, we've made it clear that climate capital is considered critical in maintaining the long-term sustainability of the business. And so we've prioritised it ahead of growth investments and ahead of shareholder returns where appropriate. But we've also made it very clear that it's those climate investments, they've got to have an appropriate commercial overlay, because this is big capital numbers that we're talking about. So you've got to do it in the most capital efficient manner. And of course, we've backed it up. We've called out we need $300 to $400 million probably over the next decade. It's a highly indicative number, but we've backed it up with a commitment of up to $150 million over the next 5 years. And that's to give investors a sense of the magnitude of the capital required at this point. And of course, final comment, we've also developed the climate scenarios, and we now test our major investment decisions against those scenarios, and it helps inform decarbonisation pathways. And I suspect there's a whole other several hours that we could spend on climate scenarios, because it's almost a head hurt topic. So, but a very interesting one nonetheless. I'll stop there.
Great, thank you, Tanya. And I think what I'm most impressed about with what you're saying here is the urgency of climate change, that the urgency of the change and acceleration that you're engaging with in the organization is commensurate with that need, and setting expectations, communicating that. I think those are such critical elements of that sort of transition. And so I'll come back if I can and talk a bit more about that, but I'd like to turn to Glenn for a minute now. I know, Glenn, that your center here at Melbourne Business School has been working and collaborating with NAB to train their bankers how to have conversations around climate change and emission reductions with their clients. Based on this and the experiences that you're having and your research, what is your assessment of the capabilities of major Australian companies to respond to the climate change issue?
Thanks. That's a great question. And as you'd expect, it varies a lot. I'd say there's a substantial mid-tier of companies that know it is important, are serious about responding, but are still at different stages of working through exactly what it will mean for them, and therefore how they need to respond in concrete terms. So inevitably, they are still building the capabilities they're going to need to execute on those responses. And to the points that Jody and Tanya made so clearly, those necessary capabilities are really broad. They may be technical, they may be managerial, they're certainly financial, fiscal. So there's a really broad set of capabilities that businesses need to build up. And I would, it's exciting to see companies who have ambitions, which I think that frankly they realize may be beyond their current capabilities, but they're making the investments to catch up and be able to deliver. There is a set of laggards, of course, and I think in a lot of ways they're struggling to come to grips with how quickly and how deeply things are changing, and really playing out what that will mean for their business. And at the other end of the spectrum, there are companies that are really doing amazing work. And I think Jody and Tanya really highlighted the things that characterize those companies. It's investments that are tied to key performance indicators, that are tied to executive remuneration, that have clear deadlines, clear measurable goals, that are both environmental and commercial. And I think it's worth noting that a lot of those most sophisticated companies are in the most challenging sectors. And that a big part, I think, of that mid-tier is in companies that don't necessarily view themselves as heavy polluters or heavy emitters, but the demands are only going to keep coming up. And the physical and transition effects of climate change are going to affect them also. And so I think that's kind of the next batch we'll see coming off the line and really trying to catch up with where the most sophisticated companies are.
Great, thanks, Glenn. And I think to that idea of capability development and thinking about strategy, I'd like to go back to Tanya, if I can, and just ask you, could you provide a little bit more insight for us into your decarbonization strategy, and what are some of the particular opportunities specifically that you're pursuing?
Yeah, there's a number of legs to this. So firstly, there's how we're thinking about reducing our direct emissions, obviously. And there's two sort of broad parallel streams of work there. The first one's about how we optimise our existing operating assets and delivering on our targets out to 2030. And that includes looking at energy and process efficiencies, trying to get more scrap into the mix. And interestingly, leveraging digital technologies, which has been another big part of our strategy, that's a key tool here in terms of how you might optimise energy consumption and process flows and the like. So it's really about optimising what we currently have. The second stream then is around preparing for the emerging technologies and then participating in that search for the breakthrough technologies. And there's some very specific things we're looking at. So just a couple of examples. We're looking at a pilot electrolyser at Port Kembla to enable hydrogen injection into the blast furnace. We're looking at biochar replacement, which is where you make use of forestry waste. We're looking at scrap melting technologies to work out how to drive a step change in the scrap consumption, because of course, when you put scrap into the blast furnace, it has a cooling effect, which is not helpful. So we're looking at how we can make better use of our indigenous gases. None of those things are easy, so there's a lot of work going on in that space. And then for the breakthrough technologies, what we're focused on is a strategy of partnerships and collaborations, and that just goes to a very clear recognition. We're a relatively small steelmaker. We cannot solve this on our own. We're just too small. So hence that strategy of partnerships with industry, with government and collaborations is going to be critically important. Some of the most talked about opportunities for us are around green hydrogen, whether it's green hydrogen injected into the blast furnace, or hydrogen DRI EAF, or hydrogen DRI melter BOF. There's a couple of different routes there. There's a number of really interesting projects going on in Europe. All of them have fairly hefty government support, and there is a long way to run in terms of full-scale commercial and technical viability. But they are very interesting. And given the long history of technology sharing which occurs in the steel industry, once someone figures it out, then the OEMs tend to get the technology and they promote it out fairly quickly. So lots of interesting stuff in terms of the technologies and how we need to stay abreast of those and participate in them. We've also got a big focus on more use of renewables. We've already, of course, have a major PPA in place, the Finley Solar Farm. That provides about 20% equivalent of the energy for Port Kembla. And we're now looking hard across the portfolio. But of course, one of the challenges we have with renewables is we need 24/7 security. So you've got to have reliable, continuous supply. So evolution of energy storage technologies, that's going to be critically, very critical for us. And of course, it's also critical in terms of that broader development of renewables. That's going to be fundamental to the development of green hydrogen because, of course, it requires vast amounts of energy. So there's quite a way to go in that space. I also think there's a lot on the revenue side, and part of our strategy is also looking at opportunities to how we can deliver carbon efficient and climate resilient products, which lends itself nicely to steel, to our customers. So that's about enhancing the performance of the products, making them stronger, lighter, longer lasting, or smarter. So one of the products we actually have is around the solar reflectance in our paint, one of our colour bond products. So it reduces the heat inside buildings. I actually think there's a long way for us to go in that space. I think there's a lot of upside opportunity. But more broadly, I think one of the key points here is what we realised some time ago is that we need to work hard to very clearly talk about the future of steel and make the case for steel in our communities. So when I first started, we were originally part of BHP. When I first started with BHP back in the mid-90s, and I very quickly ended up in the steel division. And one of my friends said to me at the time, "Oh my goodness, what did you do that for? Steel's a sunset industry. You've got no future there." And then I fast forward to today, and I think steel is fundamental to everyday life, and it's not going anywhere. So it's in the house you live in, it's the car you drive, it's the bridge you drive over, it's the stuff on your desk in front of you right now. It's made from steel or processes that need steel. And it's going to play an absolutely critical role in the transition to a low carbon world. So think wind towers and solar farms and transmission infrastructure, all of it's made from steel. So steel's not going anywhere. And given its strength and infinite recyclability, it's got a clear role to play in sustainable economic development. So it goes back to where I first started. Steel has a technology challenge. It's not a sunset industry. And this is the point where I think you can also very clearly link then our strategy to our purpose. So we didn't formally craft a purpose until about 18 months ago. I think it had always sat there in the background. But about 18 months ago, we put together our purpose, and we've been working on embedding that in the organisation. And it's we create and inspire smart solutions in steel to strengthen our communities for the future. Now, the reason why I call that out is because I think when you can link your climate strategy to your purpose and you're a purpose-led organisation, that's extremely powerful, because it's not just about having the strategy and the targets and all the artefacts that go with it. It's about having the culture and the mindset and the values of the organisation to solve the problem. So I'll stop there, but I think that's a critical part of it.
Thanks, Tanya. That's fantastic. And I think what's interesting about what you've described here is once companies open up to this is a huge issue and we need to address it, I think that opens up pathways to think about things in very different ways that are not only likely to mitigate the climate impact of business, but also creates new business opportunities. And I think that's really exciting. One thing that I may come back to and just speak to you a little bit about, you mentioned having different partners and reliance on technologies that are not quite there yet. So I think that it brings in a fair amount of risk and uncertainty into the strategy and thinking about how do you sort of collectively move in a direction. So I may come back to you and ask that question if I can, but let me turn to Glenn for a minute. So you're an educator and you teach strategy to executives and to MBAs. What are you teaching your students about this topic? And also, what are they teaching you? You're on mute, Glenn.
This is going to echo very much what we've heard before, in that my approach is very much sustainability as a strategic issue. Because as has been pointed out, really having a separate sustainability strategy is no longer enough to be a best-in-class company. You really need a sustainable strategy that's a strategy that integrates sustainability into your strategic decision-making and implementation. And in order for executives and students to get that, we really need to start with just being sure that everyone has gained a basic literacy and comfort with the underlying science, policy, and frankly, the jargon even. So depending what part of a company you've been working in, there's no inherent reason you would be familiar with scope 1 versus scope 3 emissions, et cetera, or why our students would. But understanding that and other concepts in the basic science is critical to understanding the conversations. So there's a starting point of basic comfort and sort of literacy that we're after. And then we start to explore those connections between those ideas and the concrete implications for business. And for me, that's most evident through the strategic levers of revenue, cost, risk, and social impact that a company has. And what I like about that approach is it does bring a strategic rigor. And Tanya has talked about the importance of having that in the decision-making. And it also helps because it's framed in a familiar logic and familiar way of thinking. Those are terms that anyone in a company is comfortable working with. And so we're not adding additional newness, if you will, to getting them to incorporate concerns about climate change and sustainability and match that up to what they're already experts in, be that finance, HR, innovation, strategy. That said, then you have to help executives and students see how it will play out differently. We talk about risk. Well, there are two categories of risk that are more predominant than they have been before or matter in different ways. You can think about physical risks. So right now, Taiwan is in the middle of its most severe drought in 50 years. And that means that those water-hungry semiconductor manufacturers who make over half of the world's chips are looking at constraints on production. So they're physical risks, land becoming uninsurable, increased bushfire, flooding of coastal properties, et cetera. And then the transition risks as society and economy move towards that more sustainable, low carbon future, that's going to create challenges for companies. And so really pulling that all together, it's making sure that people understand the science, the policy, the implications of sustainability through that lens of strategy so they can connect it to the entirety of what their firm does.
Thanks, Glenn. I think on that note, I want to go back to Jody for just a minute and ask you, given that we see this trend of companies more tightly integrating their climate response and net zero goals with their business strategy, What implications does this have for investors? And why is this important?
Yeah, that's right. We're not only seeing companies setting pathways for achieving long-term decarbonisation targets and underpinning them with interim targets, we are seeing the increasing nature of that integration with strategic planning. And that's really important because if you're a carbon intensive business, or if your core business is fossil fuels, I would imagine parts of your business will be fundamentally challenged going forward if it already isn't. And you have to start saying, you know, how do I sit relative to my peers on the cost and carbon curves? And that's a global playing field that you're operating in, not just an Australian and domestic one. So if I actually start with why is climate change such a big issue for our members who are long-term investors, that really sets the scene on why the net zero and strategy part is so important. So for our members, institutional long-term investors, they are universal investors. So they are invested right across the economy, across all the different sectors. And because climate change is a systemic issue, it doesn't mean you can necessarily diversify away your exposure. And then if you think about the time horizons over which that super fund, for example, would invest on an average member, you know, take myself as an example, there's a 30-year time horizon over which they will be investing my funds before I intend to draw on it. And those time horizons are really closely correlated with the time horizons over which both transition and physical risks from climate change will manifest. So you have this issue where the companies my fund has exposure to now, they will likely hold exposure to over the course of my working life. And then you have this multiplier effect where the risk actually increases as that time horizon is realized. So this is why net zero commitments and the integration into strategic planning is so important to investors. It's because climate change is such a material financial risk and investment risk, and it impacts bottom line. And to effectively mitigate, manage, and seek opportunities to create value, high-risk companies really do have to include climate change as a consideration, because to not do that, you would be putting together strategies that would be fundamentally divorced from the operating environment and the trend the global economy is moving along. And by companies making these commitments, they're really demonstrating how they intend to manage climate change over 10, 20 and 30-year horizons, which then starts to talk in the language of how the investors are investing over 10, 20 and 30-year horizons. But you know, if I'm not taking up too much time answering this question, there's kind of one really big overarching part of this discussion that permeates through all the nuances of climate change risk and opportunities, and that's to solve the problem, the climate change problem. We need all market participants to work together. And we actually recently had Mark Carney speak at our annual conference on climate change, and I remember media outlets were surprised that he said that investors needed to go where the emissions are and needed to be part of the solution. And I remember being surprised that the media outlets were surprised, because that's how AXI thinks, and that's why we're involved in company engagement, because we believe engaging with companies and being involved with them now is part of the solution to get them to where they need to be. Because divesting all direct exposure to climate change and everyone holding a green bond, it doesn't solve the problem. And what we actually need to do is we need to provide capital to many carbon intensive companies and industry so that they can find the solutions that we require in a low carbon economy. And that's solutions like hydrogen, it's solutions like low carbon plastics and cements. So what it means is that there's this really big impetus on investors striving for net zero emissions in their own portfolios and working with companies to do the same. And by companies committing to the same end goals and investors working towards it together, the risk profile of providing capital to those companies over that time is somewhat mitigated, because we've got this confidence that the money that's being invested is driving the best financial outcome for our members, and that companies are acting responsibly when it comes to their part on finding the solutions at an industry and business level.
Thanks, Jody. Just some fascinating pieces there. And I think it's too bad we don't have more time, because I think we're just starting to scratch the surface of some of these issues. And to that point, I think I want to pick up on your point around this idea of you need to have others moving. We all need to move collectively along this transition. So I would like to just ask Tanya, if I can, you know, that piece of the strategy is really highly dependent upon the actions of others. So how would you recommend that, you know, companies think about that uncertainty that is embedded sort of in that transition. And then also, if you can maybe just speak to implementation a bit more. I know you've mentioned it in sort of your first response, and then also the piece around purpose is really a motivating factor. So just wondering if you could quickly comment on those two, and then we'll move back to Jody.
Yeah, I'll come back on that uncertainty on transition one. I think you're referring to investments that you make. Is that right, Brandon? Yeah, okay.
Investments and partnerships and dependencies on others to develop pieces of this value chain that you don't necessarily or can't or you're not part of.
Yeah, critically important. So I'll talk a little bit at the moment just in terms of what it is that we're doing internally. So each business, of course, has its targets. We've cascaded the strategies down. Each business unit is building up its pipeline of investments. And then there's a number of forums that we have in place that support the implementation of the strategy. So about 18 months ago, I think it was, we set up the Climate Council. It brings together the key leaders from across the organisation from various disciplines. So we bring together the technologists, the marketers, the salespeople, the finance people, investor relations, and we explore and further development plans and share ideas. And that's been a wonderful forum for really promoting the conversation within the organisation with those key leaders. Secondly, what we do is we run a regular forum between each individual business unit and the corporate team. And I'm sure every organisation does this. We call it the quarterly business review. I'm sure they've got various names. But that's where we sit down and we review the performance of each business on a holistic basis. So we look at safety, operations, financials, emissions, environmental performance, people, capital plans. And that forum is really important because it allows for the two-way flow of information. So you get the top down and the bottom up. So top down, you get the messaging and the broader direction coming from the board and the ELT and the overarching strategy. But it also helps flush out the issues and the challenges and the areas of misalignment. And it's where the reality check sort of comes into it. And, you know, often there's the conversations where the steelmakers will say, that's just not technically possible. And so there's some really good conversations that go on. It's not exclusively in that forum, and it happens in many forums, but it's a good example of the forum that we use as part of our regular ongoing business engagement, and part of it is around climate change and the strategy. Of course, we've got Greta and her team, critically important role. They're working across the business. They're making sure that we've got a cohesive strategy from an organisation perspective. They make sure that we've got the right projects. They spend quite a bit of time along with people in the business, identifying who are the groups that we should be working with, which parts of government, state and federal government should we be interacting with, where do we need to prioritise our time. And the challenge that we're working through at the moment is where do we need to start making some investments, whether it's R&D, concept studies, research, and it all comes back to trying to understand what's the portfolio of technologies that are emerging, which ones do we think we should participate in, making sure that we are part of broader industry organisations so that we can, again, leverage those partnerships. I'm sure many people are aware we are a founding member of Responsible Steel. We founded that organisation with ArcelorMittal, and it's a standard and certification body, but it works all the way along the value chain, so it's part of that broader collaboration. And so Greta and her team, they do a lot of time in that space. Of course, we also have oversight from the board. The board are very extensively engaged in this topic. We also have a risk and sustainability subcommittee of the board, and of course the ELT. On a more practical front, I think one of the changes, we're driving it into annual budgets, and it sounds like a pretty boring, mundane thing to do. But a key part of the budget process is, of course, capital allocation. And of course, we introduced, as I said before, we introduced climate investment into our capital allocation to give climate investment a bit more visibility and focus. And so we're now starting to track through our budget process and our capital governance processes, the climate investment. And then very specifically, all of the major capital projects, such as the reline proposal at Port Kembla, they all need to be tested against the climate scenario. So it's a very simple conversation. Can I have some money for a particular project? Where's your scenario analysis? That's become embedded within the rhythms of the organisation. now. Did I just answer all of your questions there?
I think you did. Very well done. So I am conscious of time, so I do want to give some time for the participants in the webinar to chat. But I did want to ask Jody just quickly. So you've demonstrated in your first comment that there has been a significant uptick in people setting these goals and to some degree some clear sort of implementation strategies. What are maybe one or two things that you've seen that you're most excited about on that front from companies that you've worked with?
Yeah, well, if I think about when I first started at AXI, I would say that the nature and the depth of the conversations we're having with companies on climate change is vastly different to what we were having 5 years ago. And that's a reflection of that boards and leadership teams are so acutely aware of climate change and the financial risk it poses. Like if I just think about the reline that Tanya was talking about, we've actually, typically we used to meet mostly just with boards, but what we actually do now and our members is we're meeting with Tanya and Greta and having the conversation with the leaders within the businesses to talk about things like the reline of the blast furnace and how climate change is considered within that. So I think, you know, the depth of the conversation and the levels of business that are involved is completely different. That, you know, the other things I would say is most companies are integrating, we're seeing integrate a cost of carbon into their capital allocation decision-making models. You know, that's demonstrating they intend to employ capital in the most efficient manner. Particularly if you've got long life assets, you know, it's really important to stress test those investment decisions against the different return profiles. We're also seeing, as Tanya touched on, you know, climate and technology specific projects, specific allocated funds for those. And that's that, again, that recognition that it's critical for long-term sustainability for many companies. The other things I would say is probably two more very quickly. The first is the link into executive remuneration, and that's reflecting that annual budget being brought into that thinking, that focusing of leaders within the business. And the last one, and I think the most prominent one for me, is how much climate change has been a focus in, you know, full year results presentations to investors. And BlueScope's just had 2 days essentially on that, and you know, they're not alone in doing that. And that's the recognition that it really is something that can be seen as a value creator and a strategic advantage. So if I think of Boral, their FY21 investor presentations, they had 3 to 4 slides on their decarbonisation strategy, and specifically talking about how sustainability was now an intertwined part of their corporate strategy. So it's no longer sitting off to the side. And low carbon cement and sustainable cements is exactly what they see as a part of their long-term strategy. And then if you think of other companies like BHP, you know, they are making really clear examples of how they're thinking about their portfolio of assets and the kind of positioning to be a future-facing one when they, you know, because they're looking at making active decisions around their exposure to oil and gas and coal. And that's with that lens again of like, what's the best long-term and sustainable portfolio for our members. So they're kind of the key things I've seen companies are doing and demonstrating to investors on how that's being worked through.
Yeah, thank you, Jody. That's fascinating and good news, I think, as well for the planet and for industry. Glenn, so I know if I can just finish with you, and then we'll turn over to some audience questions. I know early next year you're teaching a new elective called Sustainability for Strategic Advantage. And so given the context of today's discussion, what are 2 or 3 key insights that you would share where you think business leaders should be focused right now as it relates to climate change?
Related to that, but before I fully dive in, let me say how exciting it is to hear how boring it has become in some way from Jody and Tanya's answers. You know, it's things like tying it to executive remuneration. It's things like making it part of the budgeting process. And these are core business operations. And I think the fact that for a lot of the best companies, it really is just part of the normal business operation. Not that it doesn't have its own challenges and its own opportunities. I don't want to diminish that, but the way we're seeing it built in is really exciting. So I think the fact that it's become, at some companies, a little mundane is a fantastic thing. I think one of the big messages I would like to push folks realize is the magnitude and speed of change, and it's just going to be accelerating. I think we've all read in the paper various leaders, government and corporate, saying no one could have predicted how fast things would have changed, and I'm not sure that actually reflects best insight. But boy, if we look forward, you can't get away with saying we didn't see the speed at which things were going to change anymore. And really taking that on board is challenging, because companies that don't keep up are going to be at a competitive disadvantage. Some may fail because of that. There are going to be industries that are going to transform really dramatically. But at the same time, there's some really huge opportunities. And if there's a part that we might emphasize more, I think it is the strategic opportunities that are there. And so I guess I'd offer 4 steps for executives to think about as they deal with the magnitude and speed of change. And this is going to echo some of the great insights we've already heard. Stay up to date. You don't have to be an expert, but the state of our understanding is moving really quickly. So being sure that you've got access to folks who can keep you up to date is great. Number 2, look for partners. As Tanya discussed, this is something that often spans entire value chains. So partnering is critical. Number 3 is caring for your stakeholders. Because of the implications of climate change, the demands of stakeholders are, I think, getting louder and getting more complex. And so extra attention to that. And lastly, and unsurprisingly, treat it as a core strategic issue. If you're already doing that, fantastic. If you're not, work on making it so. So that's what I'd like to leave executives with.
Thanks, Glenn. I think a really great distillation of some of the key points that were made here and really relevant. So I appreciate that. So let's open up to questions. So there's one from Warwick here, and it's for Tanya. For Tanya, saying, is there a separate investment in new ventures in clean tech and climate tech to also invest in future growth and alternative ARR opportunities?
Separate investment, separate to the $300 to $400 million that we've announced, I think that's the question. Yeah. So what we've said is it's probably going to cost $300 to $400 million to get to the 2030 and beyond. And then the commitment of the up to 150 million in the first 5 years. And that includes us thinking about what investments we might make, including direct equity investments. One of the challenges that we're working through at the moment is developing the criteria for what you should invest in and what you shouldn't. And there was a proposal that we're looking at recently where it was really exciting technology, but all it was an equity investment. And it was kind of like, well, okay, that's interesting, but unless it gives us access to the technology or to run the pilot test at our site, I'm not really that interested. What I want is access to the technology. It's not about investing into some sort of fund. So yes, it is part of the work. I would say it's still a work in progress. We're still working our way through that one. So maybe a future topic of conversation, but it's something that we're looking at the moment very actively.
Thank you, Warwick, and thanks, Tanya, for that answer. To Jody, if I can, Franz is asking that there's a fair amount of criticism, right? And we've got greenwashing, and now we're sort of transitioning to climate washing. What are some of the red flags for you to identify, potentially ineffective or bogus climate change strategies? I think it's a really interesting question to address there. Could you give us some thoughts on that?
Yeah, I suppose there's a risk of puffery in any kind of work, and greenwashing and climate washing is definitely terms that are becoming relevant. Look, what I would say is there's a little bit of a nuance in that answer, because, for a lot of the technologies that companies require to significantly decarbonize, they are longer term technologies. So what we need companies to do is, if they're relying on those technologies, is to demonstrate how they are investing in those technologies that they will need in the future. Because if you're not investing in them today, I would say that's probably a red flag, because as Tanya said, investing in those technologies and those solutions are critical to the long-term sustainability. So what we're really looking for is for companies who are reliant on technology and big solutions. We're looking to see, and it's not too different to what Tanya's already said, we're looking to see them partner with industry, with universities, and we're seeing that. So BlueScope and Rio Tinto are examples on that when it comes to the steel mills and their iron ore, the scope emissions that come from their iron ore products. They're partnering with universities to look to see how they could improve that process and reduce those emissions. It's investing, putting capital allocated to climate projects. It's ensuring that when you do make investments, they're really robustly tested against the different climate scenarios. So what I would say is the red flags typically come from companies when they set a net zero target for, say, 2050 or 2040, and then we see nothing in the in-between. What we have to see is setting of short and medium term targets that get the business to there, but then each year investors want to know how you're tracking against those targets. So if you've got a short-term target for 5 years away, I would expect, as someone who's reading those reports on behalf of investors, to see annual progress on what you've done that year to get to yourself to that point. So I would say a lot of it comes back to disclosure, being transparent and actually taking action where you need to. But I do understand that there is a concern about a lot of technologies like CCS and CCUS and hydrogen that do get a lot of criticism as being, greenwashing. And it's just that challenge that they're long dated technologies, and how you demonstrate that is a technology that's going to come online in 2040 when there's a very uncertain path on how to get there is a really big challenge for companies. But what I would say is don't discount it. There's a lot of work that's happening on the way through.
Thank you, Jody. We have a question from Jenny for Tanya. And I think it's relevant for what we're talking about here and probably useful for companies that are making this transition. What are the biggest obstacles that BlueScope has had to face to bring about the internal transition and shift in focus? And how did you tackle those challenges?
I think there's been a recognition for quite some time of the issue. It's the pace at which it's accelerated. It probably took everyone by surprise. I mean, just the speed of it. I mean, we first did our first sustainability report back in 2016 and been building up since then. But I think over the last 18 months, the speed of the change and evolution and expectations, and it's principally coming from the investor base at this point, I'd say. So I think the work of the investment community has been really important in driving this. And I almost felt at one point where there was a little bit of a gap between where the investment community was and maybe where we were working. But when you have the conversations where it's very clear that, look, if we're not on the right path here, our investors aren't going to invest in us. And ultimately, we're going to get into a position where our customers don't want to buy from us and our employees or prospective employees won't want to work for us. So it's pretty clear that you've got to deal with the issue. And I think the feedback that we continually get from the investment community, it's critically important because we play that back into the organisation. And that also helps inform our thinking, our positions, our strategies, etc. It's critically important. I'm sure the customer one will come eventually. It seems to be relatively small at the moment. And I suspect that that's because there's not a lot of alternatives. The green steel is very, very niche. You know, there was the example of the SSAB, I think it was, delivered 100 tonnes to Volvo. I mean, that's fantastic, but it was 100 tonnes in the scheme of 1.7 billion tonne industry. So I think the customer one will come, but at the moment it's really coming from the investor side. So playing back the investor discussions, communications back into the organisation, not just at the board level, but across our broader leadership forums, that's been important. And people have really, I think, picked up the challenge quite quickly. We've moved this along with a lot of pace now. That would probably be the main one, I think.
Great, thanks, Tanya. I think that's a great response.
Brandon, if I can,
yeah, please.
I just add one piece to that, relates to some research I've got going on, in that we found where it really tends to engage employees is where a company's offered both a very clear strategic vision for why they are doing these things, and they've backed it up with very clear, visible actions, so investments, inclusion in KPIs, et cetera, and then drawn the link between it. Doing just vision, people tend to discount it. Doing just actions, it helps, but people aren't always clear kind of the context to put that action into. How do these add up? So it's the companies that have combined that here's the clear vision of why we're going, why this matters to us. Connection to, as Tanya said, to purpose. And combine that and therefore we are taking these actions, and we actually do. That we've seen really does help engage employees and help across it. So I would just add that to Tanya's great insights.
I think you're absolutely right. It's the vision, the strategy, and then all of the things that go to make that work. And probably the other big accelerator here, of course, is with the pandemic, we all learned how to use technology and go online. And the level of engagement that you can now get. I mean, we've put 1,000 people through a safety program as part of our evolution programs. It is incredible the number of people that you can bring together and have a cohesive conversation is extraordinary. And so that's really helped accelerate, I think, the communication and the understanding across the broader employee population.
Great, thank you. Thank you, Tanya. So we've got lots of questions, but unfortunately probably won't have enough time to get through all of them. Let me just go back to Glenn for just a minute. So Ingmar is asking, in light of the changes that are already taking place and that have been described today, what effect would government-driven net zero targets have on businesses?
Well, I know I'd love to hear Jody and Tanya's viewpoints on this too. I think it largely depends on, again, kind of going back to my earlier answer, what the government says at some point, the commitments it makes are less important than the concrete actions. What happens concretely in terms of tax policy, trade policy, investment, et cetera. But certainly having clarity on vision and a path would take a source of uncertainty off the table. And there's enough uncertainty on the table in this regard that I think that would be helpful. So I guess that would be what I would say.
Okay. Tanya or Jody, any thoughts on this one?
Yeah, I mean, investment certainty would be good, but from our perspective, we've got our targets, we've got our plans, we've got our goal out to 2050, we've got our strategy, so we're getting on with it, and the government will do what the government does. But I think you've made a very good point there, Glenn, around the investment certainty. I think broader investment certainty, particularly around the renewable space. I mean, I think if we could get some certainty there, that would help a lot. But for us, I mean, we've got our plans and we're just getting on with it.
All right. Well, we've got just 5 minutes. Maybe I would like to just really close here by thinking about just one question for each of you, and you can think about how you would respond to this. So as individuals and leaders in various organizations, what are maybe one or two things that we might prioritize that would help us accelerate a transition to a more environmentally sustainable future? Jody, you want to start?
Yeah, that's a big, broad question.
Of course.
Look, I think starting to just treat climate risk and opportunity, as Glenn said, and as Tanya has shown, as just a normal part of the business operation. So it's not anything special. It should just be considered within, you know, the risks and opportunities that directors have to consider when they sit around the board table when it comes to those. And when you start putting that lens on it and you take the kind of, you know, a lot of the noise that happens in the Australian market away from that, you can actually really start to just focus the business on how to deal with those risks and opportunities in a commercial sense.
Thanks, Jody. Great. Glenn or Tanya?
I'll go. I've probably got 4 or 5. It's our standard list. Access to affordable, firmed, renewable energy is a big one. Competitively priced hydrogen from renewable sources, that's a massive one. There's a whole industry that's got to be stood up there. Making sure the right access to the right raw materials And there's a whole other conversation around what that actually means in terms of scrap and DRI grade ores. And of course, you need all of the right policy settings to be in place that support decarbonisation investment and make sure that you don't end up in a situation of carbon leakage. So that includes the R&D and whatnot.
Thank you, Tanya. Glenn, to finish.
So, I'm fortunate enough to be an educator and a researcher. And so for me, it's meant finding ways, and it's very much in the spirit of the earlier answers we've heard from everyone, to just make it part of regular. I think if I would never teach a strategy class, even just sort of bog standard strategy, that didn't address the challenges and opportunities of climate change that affects strategy. It's working its way into my research. And so I think just reflecting the impact it has on business and society and translating that into what I teach and what I research is the way I feel I can make the largest contribution at this point.
Thank you, Glenn. And I want to sincerely thank everyone who's been on the panel today. It's been a fantastic webinar from my point of view, and I've really enjoyed listening to these responses. I also want to thank the audience and for the tremendous response in terms of questions that we have here. I know that we always have more questions than we have time to answer, but I hope this creates an opportunity to make connections with one another. And I see that happening in the question and answer. And I think that's an opportunity to really accelerate the collaborations, which will also sort of accelerate this transition. So I think that's really important. So I want to just thank everyone for being here today. And just also let you know that you'll receive an email after the event requesting some feedback, and this will also include some links to AXI and BlueScope's documents that we've talked about. So thank you very much for attending today, and we look forward to seeing you at more of these events in the future. Thank you very much.